To trade Forex, psychology is probably the most important thing to learn and understand if we want to be successful in this industry. We saw so many people that made thousands of dollars on their demo account, and once they get to live trading, they blow it all. And that has to do with your psychology, not knowing how to control your emotions when trading. In this video, I want to give you guys some tips and tricks to advance your trading psychology. I'm going to try to give you guys some stuff that is not really heard of. Okay, so for number one is black candlestick trading. I don't see a lot of people that actually uses black candlesticks to trade. I do this every day. This is a part of my trading strategy. Black candlestick trading basically helps you just look at the market for what it truly is. Even if you're a scalper looking at your daily chart, you can put it to black candlestick, and it helps you just look at the market and price action for what it truly is and what it actually is doing. It takes away all the factors of a red candlestick going up against your direction and you're getting scared and you exit your trade when all it's doing is retesting or just making a candlestick and going in your direction. It just eliminates all that. I do want to show you guys a chart of black candlesticks and how it looks. Alrighty guys, so this is black candlesticks on gold. So gold is by far one of my favorite pairs to trade. As you guys can see, I'm going to trade right now. I actually just closed on that yesterday, but back to candlesticks. Black candlesticks, since I am a person that trades off of market structure, black candlesticks just help me see market structure for what it's truly doing, as well as the price action. And it just eliminates all those factors that you feel when you're entering into a trade. When you see a candlestick, as I said previously before, going in your opposite direction and you get scared and you exit your trade when all it's doing is just making that candlestick or just, you know, retesting and going back down. Like I said, it helps me eliminate all those other things. It helps me just to look at price action and market structure for what it's truly doing so I can get in, because like I said, I am a person that, you know, trades off of those market structure. I like to look at market structure and I trade off of that. And yeah, just really eliminates all that, and overall it helps me become a better trader, and hopefully this can help you as well. And yeah. Tip number two, do not stare at the chart. Do not stare at the market for way too long. That makes you want to get into trades that's not really there. That's not a setup. I love alarms. I like putting alarms on below the lower low or below the lower high. So if it's going higher, I can see what price is doing, and if I want to get in, I can. Alarms are very useful, especially if you're a swing trader. You don't always want to be just staring at the market. You don't want to miss out on any trades that you could possibly be in. Once it hits your price target, it lets you know, and if you want to look at the market, see what it's doing, if it's a good setup to get in, you can get in, and if it's not, you can just put another alarm on. Tip number three is to have a trading plan and to be consistent. For your trading plan, we want to have more than one influences if we want to get in. I like to use 3, so whether that is being moving average or a break of structure, break of trend line, anything like that, those are confluences to help you get in. You don't want to have just one confluence, because that's not enough to actually know that price is gonna move or gonna go in your direction. So y'all, I was sweating up. Gosh. Tip number 4 is to risk what you're comfortable with. This means not to over risk your trades. I see some people that don't even have stop losses. They don't think about the money that they could lose. All they think about is the reward. You have to look at both sides. Are you comfortable with losing this much? Think about the loss rather than your wins. Think in every trade you're gonna lose. If you're comfortable with losing that much, then risk that much. If you're not comfortable with losing that much, don't risk that much. If it's gonna blow your account, then that's not a trade setup that you want to take. You probably want to risk a little bit less. You don't want to risk your whole entire account. You don't want to risk half your account. You want to make sure what you're risking, you're going to be comfortable with losing. With that being said, you have to have a good risk to reward ratio. My minimum is a 1 to 2, but I like to reach to a 1 to 3 or higher. That's my risk to reward, and that's what I like to risk. There's some people that like to risk a 1 to 1, and that basically is you're risking as much as you're losing. You're not making any. Say if you lose 3 times and you win 3 times, it's gonna be balanced. For 1 to 3 risk reward ratio, if you lose 3 times and you win 1 time, that can balance your whole entire account. And if you lose another 2 times and you win one time, you can still get money from your trades even though you're losing more than you're winning in your trades, if that makes sense. Your risk to reward always has to be more than a 1 to 2, but yeah, try to find trade setups and trades that gives you like a 1 to 2, a 1 to 3 risk to reward. If you do wind up losing that one, your next trade, if you win, you will still be able to cover those losses because what you're risking and how much your reward is when you do win. And lastly, tip number 5 is to understand and study your losses. You want to understand why you lost that trade and try to prevent it from happening. You learn more from your lessons than your blessings. Instead of always studying your wins and how you won, try to study your losses, your lessons, because you learn more failing than you do winning. Step back and see, why did you lose that trade? Maybe you got in too late, maybe you got in too early, maybe your stop loss was a little bit too tight and you just have to let it breathe a little bit more. Just stuff like that can completely change your trading, how you trade, and your wins and losses, just because of those small things that you're fixing. Make sure that you're tracking your trades and really studying those losses so you can try to prevent it from happening from next time. Even though we're always going to lose, no person in the world is ever not going to lose, but it's going to help you understand why you lost so you won't do those things over again. Those are just 5 tips that I have learned so far to help me advance my trading psychology, and hopefully these things help you. Let me know if you guys have learned something new down below, and give me one trading psychology tip down below that you haven't heard in this video. And yeah, thank you guys so much for watching, and I'll see you guys in my next one.